Alright traders, welcome back. It is now day 11 of the bootcamp series, and today we're going to talk about actually figuring out where your entry will be in the market. Now, going back to day 2, I believe it was, we talked about risk management, we talked about portfolio management and things like that. And remember when I talked about risk reward, we had to know where our entry, our stop, and our target was. Well, over the course of the next 3 videos, that's what we'll discuss, is entry, stop, and target. And once we know that, we can better adjust and figure out our risk reward levels so that we can actually have a good chance of making money in the market. And so what we're going to do today is obviously utilize the sequence that you've been learning. In the last few days, you've learned not only how to identify sequence, but also how to measure it. And so today, all I'm going to do is show you guys the level I use to get an entry in the market. Now keep in mind that, as it says in bullet point number 2, I'm almost always using pending orders. I almost never utilize market executions, and the reason I do that is like I said, I like to use proper risk management and portfolio management. And so if I can utilize pending orders, it is going to help me to figure out the risk reward a little bit easier. And so pending orders just give me that time to do so. So with any trades using the 3, 5, 7, or 11 swing, your entry is at, make sure you write this down and highlight it, at the 100% extension. And we've talked about that. That 100% extension is the equal point from that previous extension. And we talked about saying a 3 swing where we have our origin to 1, 1 to 2, and 2 to 3. Okay? When we're measuring this length to this length, our 100 extension will be our entry. Okay? And we'll talk about directional in a minute. But it's very simple. And so what we want to do and what we want to remember, though, is that, you know, just today's video on entry is not, okay, well, he taught us how to enter, now it's time to go enter a trade. Today's video is to just give us our good entry zones. We have to take into account the structure, the retracements, the trend lines, the things that we have talked about, the volume analysis from the broker books. We have to take all that into account. So as you can see, this is really just a course that we're just stacking information on top of one another. So you have a good idea of what to do, and you have a good idea of how to approach the market. And so let's go over to a chart here, and I want to take a look at this with you so you can kind of see what we're doing. Now this is just an example of an entry. And so you can see here, we had an extremely bullish market followed by a 3-swing pullback. Now on our entry, we're always trying to enter with trend. So what's the direction here? The direction's up. If the direction's up, we're always looking to get long. We're looking to buy the market, go long in the market. And so we're looking for any 3-swing sequence. So step 1 of doing that, we're always trying to find the highest point that changed directions. We did that. That's now origin. Then we find the lowest point it gets to before pulling back. It's done that. That's now point 1. Okay? That's now point 1. And then what we did is we found the deepest pullback from that point, which was here, which is point 2. And once this low broke, as we talked about, once again, you'll see a lot of the rules that we talked about are revisited. Once that low broke, it's now time to take a look for an entry. So what I did was I drew from origin here, click and drag from origin to point 1, from 1 to 2, and then of course, as you can see, it spit out a couple numbers. The 61A was here, the 100 level was here. As you can see, I have a buy limit. You learned about buy limits. If you don't remember, go back to those videos. We talked about them. I have a buy limit sitting right at that 100 level. The goal of this is to get in the market right when the sequence completes at the 100 level. Now this is just our entry, meaning off of just the 100 level. As we talk about, we need to do our check down process as well. We need to look at the trend lines. We need to look at support and resistance. We need to look at retracements to make sure, to make absolutely sure that we have a crisp entry, that there's nothing contradicting our direction. Okay, so our entry is as simple as that. We are looking for the 100 level. So if I show you this again, here's an example of another trade setup that we had, and this can be attacked a couple different ways. We have this as a sequence here, as well as we have this as a sequence here, right? And so all we're doing once again is finding the 100 level. And as you can see in this one, we have a take profit and a stop loss set, and don't worry, that's coming in the next couple of days. Today we're only talking about the entry. But the goal is for you to get used to measuring this and putting your pendings at the 100 level, the 100 Fibonacci extension. Okay? And so in this case, you know, what I would have been looking at is I would have been looking left, and I would have been looking at the structure levels over here, marking all of these levels out. And as the market breaks, as you can see, as the market breaks these levels, that's when I start to take advantage and measure out into the 100 level. This is a very advanced example because this is our external, this is our internal. They're both coming about the same spot, which is why we would have actually put the pending down. And we'll talk about externals versus internals soon. But to do with the entry, that's what you're looking for. So I'm going to go back to that chart we've been talking about and show you how I'd approach that. So here's that chart again, and of course in yesterday's video we talked about this big zone as our, you know, PRZ, our potential reversal zone, and it's giving us a really good idea of what to do. Now in this today's video, what did you just learn? You just learned where I should look to enter at. So we had a bullish market. Okay, we had a pullback. We had an origin, a 1, a 2, and we're looking for 3. Right in here at this 100 level, make it red, this is where you're looking to trade the market. This is where you're looking to buy this pair because this market has gone up, 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 up. It's done a 3-leg pullback. It's time to go again. Okay? And so that's important to remember because all we did was we just measured. So as you can see, there was no extra work in today's video. 2 days ago, we learned about, you know, how to find the origin, how to find 1, how to find 2, and then even more into more advanced sections. Then in yesterday's video, we learned about how to measure the Fibonacci extension, how to use the tool. In today's, all we're doing is learning how to use the numbers. And so the first number that we're using, once again, is that Fibonacci extension level of 100. And this is not guaranteed. You're not just going to measure this and put this down. Your goal is to then find your best potential area. And I don't want to get too far ahead of myself because we'll talk about confluence trading and golden zone trading. But the idea behind it is to utilize this as that first sort of line of defense. Okay? That line of defense. All right? And so, you know, if we were to go over to this, for example, here's an example of Euro Aussie. Predominantly speaking, what do we see this market doing? Bearish, correct. So if we see the market being bearish, then what do we anticipate happening? We anticipate the market to pull back into the levels of support and resistance and give us a good sign to continue to short with the trend. And so I zoom in here and I look at the very bottom to its first strike and I measure it. Origin to 1, 1 to 2, okay, and 2 to 3. As you can see, where's my pending order? Right there at the 100 level. Here's our zone in here that we anticipate the market to reverse in. Okay, and so as you can see, this works on both ways in both directions. And so over and over and over again, all you're looking for is a trend continuation. You find a strong trend, you try to continue with the trend. The major issue with traders with anything, there's two things. One is they don't zoom out enough. You know, this is a 4-hour, we're pretty zoomed out, we're paying attention to a lot of information. And number two, they have trouble with, they're only looking for reversals. They're looking for double tops and double bottoms at all times. They're never looking for trend continuation trades. as you can see, this is a trend continuation trade. And so all I'm trying to do is get myself in a situation where, this market's been bullish, directional bias has changed from these highs, and now we're looking for a really large three-leg pullback. The market always has to pull back in 3 legs. And so we're looking to take advantage of this spike as we continue down. And of course, at then some point, I do anticipate this market to continue higher as the direction is bullish. But every time you have any sort of trend, your market's always going to correct in a minimum of a 3-leg sequence. And right now, we only have 1, and we're working on 2. So I anticipate it further. So I'm looking for a better short opportunity, and I'm looking for that entry. Okay, so that's how we enter off of the 100 level. In this short video is just all we'll talk about is entry. So what I'm going to talk about in tomorrow's video is how to then set up our stop loss level for entry.